the community call, and really excited about this. So welcome everyone to the next SwissAssetDAO community call. And what's awesome about community calls is because they're all about the community. So today, really want to say, I have a big pleasure of welcoming Nick on the community call. And it's going to be a blast and it's going to be awesome. And I don't know, Nick, are you comfortable that I shared that you're one of the founding members? I know that formally you're approved. So it's not only, building a community, but also welcoming one of the community members. So really, I want to say thanks very much for joining, and hopefully we have a blast, today talking about you. You're the star of today's community call for sure. Yeah.
Definitely. Thanks, Anton, for having me. Hey, everyone. It's a pleasure to be here to chat with you, to discuss a little bit about the treasury management and all the stuff that I did and I'm still doing. Very keen also to be a part of the SwissAssetDAO, and hopefully we'll have a nice chat today. Maybe for the start, if I start with a
Awesome.
brief introduction of myself,
Yeah.
so that you're familiar
Yeah.
with who I am and what I'm working on. So my name is Nick. I'm originally from Slovenia. I've been in crypto since 2016, joined full-time in 2019. Previously, I was in TradFi as most of the, let's say, finance guys that are currently in crypto. But I joined in 2019. I joined Bitstamp. You're probably familiar with Bitstamp. It's currently the oldest running crypto exchange, and I joined Bitstamp to actually help build and structure the treasury department from the ground up. So back then, it was probably only a few companies in crypto, if they were actually having like a proper set up treasury department. Everything else was just working on let's say some sort of finance basis. There were probably some finance managers that were handling everything. So we were probably one of the first companies that actually built like a proper treasury department. We essentially had to take a banking framework as a core and then apply it to, let's say, to a crypto company, because it was non-existing back then, right? And then I spent roughly 4 years at Bitstamp. The infrastructure and the core, let's say, treasury setup that we eventually built, it's still let's say holding true, is still holding well, although the volumes and everything increased more than tenfold in the last during the last bull market and going forward. I spent the last year there mostly focused on treasury analytics. So we were mostly analyzing all the inflows, outflows, treasury optimization, how to allocate funds more efficiently, and all the stuff. And then last December, I joined Sweat Economy. For you that are not familiar with the app, is essentially a decentralized app that in its core, it pays you to walk. But the key thing is that it comes from a very successful Web2 app that has 120 million active users or registered users. And it's one of the biggest decentralized apps currently available on the market. Around, let's say, million active users per month, about 20 million registered up to date. It's only 1 year old, so it's been quite fast. And I'm there mostly responsible for treasury management and tokenomics, let's say, optimization. But you can see tokenomics as a part of a treasury management, because essentially a token in any of the centralized app DeFi project is essentially a core of the whole ecosystem. And if the token doesn't, let's say, work as intended, everything goes in vain, right? It doesn't help you, like if you have like a good product, if your token is a core infrastructure and it doesn't perform or act within the ecosystem as it should. So that's that. And apart from this, I've been also quite, let's say, actively involved in with the different startups. I helped co-found a few. I also advised probably more than 50 in the last 2 to 3 years. I've advised mostly on token modeling and tokenomics, but lately also some of them on the treasury management. Treasury management maybe became a bit more popular after the FTX crash, after the Terra Luna and the USD DPEC happened and all this stuff, and more projects tend to let's say, shift more focus to the treasury and actually give some focus on the treasury itself as well. Because the main difference between the traditional finance and I'd say the crypto treasury management as such is that everything happens much faster and you're much more exposed to all the risks that to an extent exist in the traditional finance, but I think are potentialized here in crypto as well. So for example, the FX, if I call it that FX, and let's say the currency risk. So for example, in during the bear market in 2018, when I was, let's say, pretty early stage, pretty new in the crypto, I saw quite a lot of projects, that raised back then in 2016, 2017. It was pretty normal to raise funds in ETH. So let's say all the projects had quite a lot of huge treasuries in ETH. Allocations were probably in a few million US dollars valuation, but at the top of the peak, at top of a bull run, it was probably 10 to 20, maybe even more, is the whole size of the treasury, right? And when the market started to decline, nobody really thought that it could go that low eventually. So the project that it was actually a really good project that had like probably a few years of runway, maybe even up to 5-10 years of runway during the bull market, shrank the runway to a few months after the year or so, because it went from, I think, 1,500 to probably 100 to 200 US dollars. So it shrank like 90%, 95%. So if you hold like 10 million of your treasury, you're probably left with 1 million or so. So it became really important to actually manage this properly, more efficiently, and took some, let's say, some knowledge from the TradFi that essentially was already there. And I see that in lately, in the last, let's say, 2-3 years, more projects tend to act, let's say, more rational, more risk averse, if I say so, because essentially if you're still in the early stage and if you want to build like a product long term, until you start to generate like a solid sustainable revenue, you are burning cash, right? And you have to have a solid sustainable runway, sustainable treasury, to, let's say, to live through the bear market, to live through the ups and downs. Because otherwise, even if you have the best product and you burn your cash too fast, you will not be able to actually launch the product. So what I saw lately is a lot of projects tend to prefer hold the vast majority of the let's say their treasury in the stable coins. Also because of the interest rates that are currently on the market, on the US market in particular, right? You get 5% of the short-term T-bills. It became really efficient also from an investment perspective, because essentially you invest in let's say let's call it risk-free asset for 5% yield per year. And essentially there are all sorts of solutions. You can go in their own chain or off chain through a bank. So that don't necessarily mean that you have to convert your stable coins. And the other aspect that is also really important, for example, that also only lately, I'd say most of the projects, let's say, getting to know this, is that let's say the native token allocation of the project should not be perceived as let's say as a core treasury allocation, right? Back in the 2017, 2018, a lot of the projects actually financed them out of their native tokens treasury, but your token is essentially used primarily as a support of the ecosystem. So it has to have certain utility, it has to have certain benefits within an ecosystem, it has to be used, transacted, there has to be some volume, some exchange of hands within the ecosystem, and your primary goal shouldn't be to sell your token on the market for profit, or to actually support your runway, or to extend your runway and support your operation. Because once you start doing this, you're already in trouble, right? And also your community, your contributors, and everything is on chain and everything is visible. So once you start doing that, everybody will see that something's happening, something's wrong with the project itself. Of course, this doesn't mean that you can't, let's say, rebalance your treasury from time to time, particularly when we see like a large growth or large upward moves. You definitely need to take some small portion of profits, right, in order to take profit, to lock in some of the profits and not to wait for the market to turn down. But this shouldn't be, let's say, in a size to affect actual price of your token. So yeah, I'll stop here. I was talking too much.
No, first of all, thanks a lot. Awesome, Nick, really awesome. And I can feel the passion, with which you speak, and the knowledge is just bursting from you. So really, thanks. I think we can continue having the conversation like this because it's really about you and sharing your expertise and then your knowledge. And maybe I want to ask you, like, first of all, just to tell you, we are breaking all the records with the number of people who tuned in. So Nick, you are super popular actually. So we have more than 50 people. It was the peak just a few seconds ago. So really awesome across all platforms. And maybe I want to ask you a couple of questions also to zoom in on a couple of topics you mentioned. So first, want to ask you what brought you closer to SwissAssetDAO and what was your motivation to become a founding member? So I really want to ask you that. And then I think, now as we are kind of going through objectively a bear market, can you tell us a bit how was your experience going through a bear market at Bitstamp in 2018, which was at 19, which was a crypto exchange, and then also kind of managing the treasury today with Sweat. By the way, just to show everyone, where is my wallet here? It's here. I'm a proud member as well of have my Sweat wallet, so I'm walking a lot and earning some tokens. So contrast between a bear market and situations, and also maybe the change in the infrastructure that you use in between this couple of years at Bitstamp and today actually it's Sweat Economy. So can you kind of walk us through that? And also first, if you can kind of share what attracted you to SwissAssetDAO. And I'll leave the floor again to you. Just keep on talking. I think this is awesome.
Sounds good. Yeah, definitely a good question. So to answer the first one, I've been actually, let's say, actively monitoring different governance models for quite a while, but I haven't really had a chance to go actively in any of them, or let's say I was partially active in some of them, but didn't really dig deeper into it. I started to let's say get more hands-on work now at Sweat, and SwissAssetDAO with let's say all the interesting stuff that it intends to do, and all the let's say the experienced members was let's say a really good opportunity for me to actually expand on my knowledge, to talk to the peers, to talk to the guys that are also let's say experienced in other fields, and to actually help and contribute to the let's say to the topics that I'm most experienced on. So that was the key thing of why I actually applied and why it gained a lot of interest. And I'm really happy to actually be accepted as a founding member, and really happy to be able to contribute. And maybe for the let's say for the second question, on what's the difference between let's say going through the bear market as a crypto exchange or within the let's say decentralized app or a DeFi protocol. I'd say that if I start with a TradFi, as I previously worked in a treasury in a TradFi, everything happens much slower, right? So for example, something that happened on a weekly basis, on a monthly basis, in crypto it happens on daily basis. So for example, in a crypto exchange, it happened on maybe weekly to daily basis. Decentralized apps, DeFi space, everything happens even quicker, right? You can have something that needs to be done actually on hourly basis. So I'd say that the more you go towards native crypto projects, the more you're affected by the bear market itself, I'd say. Although it's been developed quite a lot of projects are developing. The ones that managed to get solid funding before the let's say the start of the bear market, who have like a solid runway, are building really good products. So there's a lot of stuff happening behind the curtains. But I'd say that usually centralized exchanges are affected by lower volumes, which of course reduces their revenues, their income. But it's still they're still acting as some sort of core infrastructure within the crypto. You have to have like at least for the time being, you have to have like centralized exchanges to actually, to operate, to have your token listed somewhere and to actually transact it. So from this perspective, it's a bit less delicate, let's say, than if you're like in a native crypto project where you're exposed to all the market shifts, all the let's say decreases in the price of, let's say, Bitcoin that affects everything. Also the let's say the size of the community that you essentially have, because we all see that during the bear market, the percentage of the retail traders, the retail people that are actually let's say transacting actively using different apps, different DeFi dApps in crypto falls drastically, right? So also the volumes are very low. The same thing goes for the centralized exchanges, but you also have other players that are actually using the exchanges. Whereas for the centralized apps, for the time being, apart from certain DEXs, there's mostly retail, right? And once the crypto is a bit quiet, a bit low, it's not as popular, in the everyday conversations. Also, the retail tends to be a bit averse towards crypto, towards using the apps. But the main thing, if I, let's say, go back to the treasury and to the liquidity itself, I'd say that the main difference is that most of the, let's say, crypto native apps, either decentralized app or let's say decentralized exchange or DeFi project, if they do not have like a really big funding behind that will support them throughout the bear market, and also some of the DeFi projects are actually generating like really sustainable revenue, then you probably don't have any issues with your runway. You can also invest a portion of your treasury to earn some yield. But I'd say that roughly 90% of the project are still in the, let's say, in the cash burning phase, right? So what would be the main difference here is that if you're, let's say, on a centralized exchange, you're a pretty big firm, you could have like a cash burn, but you're also like an established company and you have options to actually navigate through the bear market, right? Whereas if you're like in a small let's say crypto native project, the centralized app, you have to survive. You have to be prepared for a prolonged bear market, because we don't know it could end, let's say, in the next year, depending on inflation, depending on the interest rate, depending on a lot of external factors. It can also last another 2 or 3 years. We don't know how long it will, right? And I think that the top priority should be, until you're not like generating a sustainable revenue, until you're not like hitting a break even, you should protect your funds at all costs, right? You should minimize your costs if you're having a cash burn, and try to probably forecast to survive at least, let's say, another 2 years if the conditions remain unchanged. Because essentially the ones that build through a bear market, and if you manage to launch the product during the bear market, or let's say immediately after the bear market, you already have a big advantage once the market turns, once new participants come in, and you already have everything in place. So it's much, let's say, you're much better positioned to actually generate revenue, to bring new people in, to actually get additional funding if you need it. And contrary to the projects that are actually starting once the bull market starts, because you need a certain, let's say, amount of time for implementation. And on the other hand, if you're building like a really successful project and your runway lasts for, I don't know, 9-10 months, and bear market happens to hold for another 2 years, and if you run out of cash like before the bear market stops, before the bear market turns into the bull, it doesn't help either, right? Because you eventually will have to shut down the project, shut down the company, and you won't be able, in most cases, to relaunch the project successfully during the bull market. So I'd say that this is the main difference on how to approach, let's say, the surviving mode that's happening during the bear market.
Awesome. Really, thanks a lot. Awesome, Nick. Really, thanks very much. And just to say, we have another member on the call, founding member as well. This is a Slovenian now invasion of SwissAssetDAO. So Jernej, welcome as well. Jernej, pozdrav i drago mi što se pridružio. So there's actually, just to say, is like, pozdrav, ciao. So there's, a lot of people are tuning in and joining, and everybody's listening. I think this is awesome. There are a couple of questions actually that came in from the audience. So first one is, came from Simon, who asks, do you think that a tokenomics simulation, or a person who has an expertise in tokenomics simulation, how the token evolves, the inflationary, deflationary aspects, the utility, do you think that could help going forward in the context of treasury management? So this is the first question. And the second question came from Tamlin. Kind of what products do you see now on the treasury side being very interesting for optimization and diversification of the treasury? So you mentioned kind of real world assets are interesting to you as a treasury manager as well now. So what's interesting for you in that space? And maybe what tools do you use to access and invest in such products? So these are kind of like the two questions. And hopefully we can get some thoughts around you on that one, yeah?
Yeah, definitely. Sounds good. So about the first one, yeah, the tokenomics simulations definitely help. But I usually tend to look at a token, the native token, separately from the rest of the treasury. So once you have like a certain simulation, supply-demand model, and all the deflationary schema made, you actually try to balance it out and to actually, let's say, to an extent, mitigate the potential sell pressure that could happen on your token, right? Of course, you can't really, let's say, affect the price directly, because it essentially depends how the Bitcoin will perform, how the global market will perform, and everything. You can do some, let's say, short-term pushes. But all in all, it's all about you try to create a sustainable token model behind, right? So that it's not like you're just minting the tokens, you're giving out rewards, because once these tokens are unlocked, once these tokens get to the public, it will hit the market, and the token price will go down, right? And if you want to create a project for long term, you have to sustain the price, because a lot of projects, like, they're looking to a really short time framework, right? They're looking for a year since the launch, but most of the tokens will survive a year, right? But if you see, let's say, tokens that were launched in 2018, probably 99% of them are at all-time low, right? They were going through some peaks, and now they are probably in a few cents, because they didn't hold, like, they didn't have the utility. They maybe were launched too early, because they were in 2018, but that's the main idea behind, token simulations and having to sustain the token price. Also, it really depends on the utility that your token has within the ecosystem. So it changes a little bit if you're like a DeFi protocol, if you are a decentralized app, or if you're, I don't know, a gaming project or something different. So let's say different token models have different implications. But it's definitely useful not only to have like an allocations when you launch the token, but also have some, let's say, more sophisticated, even though these are only simulations at this point, to at least have some sort of framework on how would you manage, or that you have like some numbers on actuals as well. What are your demand drivers, what are your supply drivers, let's say, and how to balance this out.
Yes. Yeah, Nick, can I just add something, maybe also to get a quick opinion of you? So I have seen, running a market-making company, I have seen a lot of attempts by the projects to use capital from the treasury, to boost liquidity, and many times, to manage the price of a token. And I have always seen it done very unsuccessfully. Like, this doesn't work. You cannot fight the market. And I like how you said it. It's like, basically, it's the Bitcoin is the driver of the whole market. The Bitcoin is going down, and you're using treasury capital to provide liquidity for your token and try to manage the price. It's a failure. But can I tell you, because I have seen it on the market making side, can you tell us if you have seen it on the treasury management side? What was your experience there? Have you ever seen success stories there? I have not, but maybe I want to hear your thoughts before we dive into the topic of real world assets.
Yeah, definitely. I mean, you're probably talking about the buybacks, right? So there are some, let's say, good use cases that were on the market. But usual problem with the buybacks is that they tend to work for a certain period of time until you're, let's say, doing them regularly, but they actually burn your capital, right? So you probably can't sustain this to infinity, because you will essentially run out of funds, and you will have to sell your token again in the future in order to to increase your stablecoin allocation in this case. It may be handy to let's say to use some sort of temporary buyback during, let's say, the big unlock dates, or during the times that you expect like a huge sell pressure that will flood the market. You can then allocate a certain percentage of funds, or let's say a certain allocation of funds through market makers to counter trade, let's say, this potential sell pressure, which will theoretically, let's say, help support the price. But all short-term, let's say shorter-term buybacks tend to fail, as you mentioned, because essentially, if you can do a buyback, but if Bitcoin will turn down and decrease, I don't know, 30% from here, all your buybacks will go in vain, probably, right? You could perform a little bit better than a general market, but it's probably not worth allocating so much capital that you could spend to increase your runway towards the token buyback. Maybe for the use cases that let's say that could be successful is once you start generating sustainable revenue. This is mostly applicable to different decentralized exchanges and some DeFi protocols that are actually creating good revenue. They could allocate, let's say, a portion of the revenue towards buybacks, right, to support the price and to help, let's say, theoretically increase the price of the token. So if you have a constant inflows of revenue of tokens, you can definitely use a percentage of that towards the buybacks, because you're not burning your cash, you're not shrinking your runway. Another let's say issue that happens here is once you're, let's say, a small project, every buyback has a solid effect on your token price, because the liquidity and the volumes are relatively low compared to the buybacks that you're doing, right? But once you, let's say, increase in market cap, increase in volumes, and you'll probably enter, I don't know, top 200 on coin market cap, maybe 150. It becomes really expensive to actually perform buybacks high enough to actually have an effect, because you start to your volumes increased in millions, so you probably have to do buybacks probably a few hundred K to $1 million per month, which is definitely unsustainable in the long run.
Awesome. Thanks a lot for this. And so I think as a summary for everyone who is in running a project and considering using capital from the treasury for long-term price management to basically not do it, I'm very happy to hear it from an expert. I've been telling that to projects for many years. Many have listened, but a few have not as well. So, and then it kind of ended painfully. But maybe to then ask kind of like, the last question around real-world assets, which is what actually gathered us together as well within SwissAssetDAO. What's interesting for you? What kind of stuff are you looking at? What are you excited about? What do you see coming in the future? And what kind of tools and infrastructure are you using to deploy capital in real-world assets?
Yeah, it's a good question. I think that in the real-world asset space, it's been a lot of stuff developed in the last probably 6 to 12 months. A lot of projects are, let's say, still to be launched. So I think that the future here is bright, and I think that towards the next bull run, we will have some really, really good projects in place. There are also several, let's say, decentralized exchanges that aim to tackle exactly the real-world assets for different, let's say, indices, different protocols, different parameters. But I'd say for the time being, we can see that probably Maple Finance is the main one that tackles different real-world asset pools. From what I see, for the time being, mostly, or let's say the most successful use cases were tokenizing or bringing on chain, let's say, different financial products, let's say, different loans, different I don't know, mortgages, and all different stuff. But I think that one big, let's say, a missing point here, missing parameter here is the real estate, right? There are a lot of projects that let's say aim to tackle this in the past. There are a lot of projects that are trying to solve this issue, but I think that it still hasn't come to like a really sustainable, really practical. If I say really practical solution to actually solve this, it has to do, of course, with the regulation and everything. But I think that here is like a lot of opportunity. On the other side, there are projects that are trying to tokenize everything from let's say art to let's say luxury watches. I know even the protocol that it's trying to let's say bring on chain like a collectibles like a really rare Pokemon cards, for example, and all this stuff. So it's practically I'd say that there are numerous options. That's probably there is no limit. There is no cap on what can you bring on chain. There are some successful projects such as Maple Finance, maybe Centrifuge, and some other players on the market that are already doing like a really good work. But I think there is still a lot of stuff to do. Maybe an interesting use case is also the tokenized T-bills, right? Because particularly because the market state and the rates, the US the US market rates are high, and this become really useful in the last, or really efficient for the project in the last 6 months. There are a lot of projects that essentially launched different market making or T-bills, let's say, on-chain solutions. Maple has a pool on this, I think, and then there are Ondo Finance and Open Eden, I believe. They all have different approaches. Some of them are tackling this through ETFs. Some of them are going like directly. So it really depends on the risk appetite that you want to have. But all in all, I'd say that there's still a lot of room for improvement, and still a lot of things that are not being solved. And I'd say that until the next bull market, is still a lot of time to actually to build and to launch something interesting in the real world asset space. As I honestly believe that this will be one of the key narratives also in the next bull run, because it essentially enables also the big TradFi institutions to actually enter the let's say the DeFi space as such. Not only the centralized finance in crypto, but also the DeFi space.
Awesome. Thanks a lot, Nick. I mean, this was really like amazing knowledge dump. So really appreciate this. Was superb. And also, I just want to say it's honor to have you on the call, because you bring such a wealth of knowledge and experience from different sides of the crypto industry, crypto ecosystem. And and I think just to say I'm super happy that we broke all the records today with the people that tuned in. So you're very popular, and just wanted to say it was awesome. Actually, maybe I can pass the word as well to Jernej, another Slovenian connection here. So Jernej is a founder and CEO of a super well-known crypto company called Pel Matrix that does execution, algorithmic trading, and order routing and order management. So if you have any questions for here while we're on this call, Jernej, or for your compatriot Nick, so please fire away, or Tom as well if you have any questions. I asked a lot, so I can pass the word to you guys as well.
Yeah, thank you for the word. Nick, thank you for coming in today, and sorry for being late. I was stuck in meetings. It's really crazy for us these days. We are preparing for our, let's say, speech and appearance in Dubai on 15th to 18th of October. Anton, are you there in Dubai? Jitex?
I will come and to support you at minimum, So they were the only reason why I'm going there, to be honest,
Yeah, super. Anybody that is there, please ping me. We will be having, I don't know which day exactly, probably 16th. We will have our own booth, and the whole day we will be having panel discussions on the booth. It's going to be interesting, all sorts of people. Our new partner, Sora, which is liquidity pool for Polka Swap is also joining us there. Our clients from MENA region as well. Hopefully our broker Securency will join as well, etc. So it's going to be interesting. And yeah, everybody's preparing, as you say, Nick. We still have quite some time before the bull run starts.
Yeah. Do you have any before the bull run starts? Do you have any question for Nick as well on the treasury management side? Yeah.
Yeah, I mean, regarding the real world assets, it's really interesting topic that I'm still discovering. What I stumbled upon is that there is like in crypto community, half of the community is against real world assets. This is something that I noticed. I don't know if it's the same with you. And there is many people, especially professionals, that are really for the real world assets. That this is as well what I believe, that this is what will be one of the key ingredients for the next bull run. And I would like to hear how do you comment this, Nick?
Yeah, it might be the case, particularly with let's say crypto native guys, right? Because it's essentially bringing real world assets on chain. Probably in most cases requires also some off-chain work, right? Some off-chain database, let's say, some sort of oracles, if I say so, right? So it's not like a pure crypto fully on-chain stuff. So that might be the reason. I haven't, let's say, seen quite a lot of people against it yet, but this might be one of the reasons, right? Also, on the other hand, it's I'd say that it's in general it's quite a complex topic, right? It's quite a complex thing, to bring because all these products essentially existing in traditional finance are pretty complex itself, and then bringing this on chain. It adds another, let's say, layer of complexity. So this could be another reason, because if you're not like that, let's say, tech savvy, or let's say a finance guy, that you really understand all these products, how they work in its core, it's probably hard to understand how everything works together, right? Even I have sometimes problems, to follow everything that's been going around in a space. So.
Yeah, amazing. Thank you.
Okay. Thanks a lot. Tom, you want to jump in as well and ask for, while we have still Nick on a call? Yeah. You're muted. Unmute yourself, please. Yeah. We can wait for a second. Yeah, don't worry. Take your time. Yeah. Sometimes the technology, even if you have a full-blown studio, it's difficult actually. Yeah. You want us to wait for a little bit to try?
Check 1 2 1 2.
Yes, go for it.
Wrong microphone selected. There's about this many of them in my list. Anyway, Nick, nice to meet you, and thank you for joining our little group here. I think our little group will be growing after this event. It's the largest live stream we've had to date yet. Thank you for bringing your social media presence and your flock, as we would say in English. But I do have a question. We're just starting out. Our plan is not to offer a token. We've got that's down the road and that type of stuff. But there's many missteps a new DAO or a new organization with a treasury can make. Other than the issues with tokens and buybacks and all that. What are things that you've seen new people or new groups make right off the bat when they start? They're like, oh, if they hadn't done that, it would be much better, down the road. Can you give us some advice on that?
Yeah, sure. It's a good question. Particularly, let's say if you're not having your own token, that it all comes to the liquidity management and let's say forecasting and runway, which to an extent, it's pretty similar to let's say a TradFi treasury management, right? You project your cost. If you're still burning cash, you simulate your runway, and you try to to survive long enough to be profitable and to start to generate revenue. So I'd say that the main thing is, which is quite usual in crypto, that the projects that tend to get some solid funding are spending the funds too fast, right? Because if you manage to close in like a good chunk of funds, then you're giving out or you're paying all sorts of directions. So I'd say that most of the startups fail here, right? So that you have to be pretty conservative at the start. Of course, you have to have like a core people in, core infrastructure set up, but there are a lot of stuff that you don't urgently need at the early stages. I'd say that, and then again, also in TradFi, it's the FX risk, let's say, but here as well, maybe the currency risk. It really depends in what currencies, let's say in cryptocurrencies or in fiat currencies, are you actually paying the invoices, paying the people, and in what currencies are you receiving the funds in, so the revenue. So you have to balance this out, particularly if some of it's not in stable coins, right? Because you're then exposed to the market volatility. There's that, and then maybe I totally forgot the third one, which is probably the most important one, is the diversification of funds, or let's say the counterparty risk management as such. Because I saw a lot of projects, particularly ones that were built on Solana, had a lot of funds, most of their treasury with FTX, right? So once the FTX crashed, they were actually left without the runway. So they had like a solid runway, everything was ready, and then because of the FTX crash, they essentially had to shut down the project. The same goes for the bank. We saw with the SVB, Signature, Silvergate Bank, and all this stuff. So it's always good to have the funds diversified. So if it goes for crypto, you should have like you should have minimum funds on the centralized exchanges at all times. Let's say give more focus on the self-custody wallets. Where it goes for the fiat, try to diversify among 2 or 3 banks, and as in TradFi, try to keep the most of funds with the most reliable banks, and then with the smaller banks, less exposure. So I'd say this one is the most important part, because essentially in the early stages, you want to protect your runway. So this should be like the main priority as a treasury within the crypto project. It's not about the, let's say, revenue generation or how to actually profit from the treasury holdings, because essentially they are pretty low compared to the, let's say, to the yield, to the risk that you can take here. So it's more about the capital protection and to actually balance out the runway so that you manage to launch the product, that you manage to market the product, and start generating revenue. And then once you start to generate revenue, then you take a look at all the investment opportunities that are available on the market.
Well, I'll ask one other question, but this could be a 20-hour answer, but it can be a short one. I'm going to use this very, very word that is not the S word or the F word or something like that. It's the T word. I call it tax. And not in tokenomics type tax, but in jurisdictional tax and that type of stuff. What mistakes or things that you've seen done right at the beginning of a project set the stage for people properly, not just complying, but not causing a problem with taxes in their jurisdiction?
So I'd say that this is more of a question for legal guys, right? But it's still, it really depends on the jurisdictions. That are still there's still a lot of unknowns out there, right? So I think that both the regulators and the project are still learning. I've seen a lot of projects actually opening the core entities in the offshore, let's say, or some non-regulated countries, because not because they want to shift the funds out of the country, but because of the unclarity of the regulation, right? And it was the easiest way for them to actually open let's say the company in the BVI in the Caymans or in the Bahamas, for example, compared to, let's say, opening in some European countries, because they don't know how it will essentially go with the regulators. But we see some solid moves in the last year. Let's say that Singapore is becoming more popular. I think that the Middle East also, Switzerland, of course.
Right.
There are some jurisdictions that are, let's say, working on solid regulation. But yeah, at the end, you definitely need to understand. I'd say that the first question should be who your main target is, right? If you're, let's say, if you're like a purely DeFi project and you're let's say you're aiming at I don't know, retail, crypto natives, and all this stuff, you don't really care about the regulations for most of the part, right? But if you want to target like institutionals, prop traders, so let's say big established firms, or the ones that are, let's say, if I say so, not acting anonymously on the market, it helps a lot having like a regulated entity as a part of your project, because it gives trust, right? And if you have a regulated entity, also it will be much easier to close deals with a bigger counterpart.
Right. There's somebody to sue if something goes wrong. Well, thanks for your answers. I really appreciate it.
Awesome. So thanks a lot, everyone. Thanks a lot, Tom, Jerne, and Nick. I think we could go on forever, but I think slowly we should be wrapping it up. And I think, just want to say it was great to have you here. When we have, so we have here 3 founding members on the call, including me, by the way, as well. So 4. And it's a great, to have so much knowledge and experience within SwissAssetDAO, community. We're among the founding members. So really wanted to kind of first say, thank you to all of you for joining and being a part of it today. Inviting also other people who are keen to join SwissAssetDAO, that are motivated by the vision of DAO as legal and bringing real world assets closer to the DAO ecosystem, to the crypto. And, just wanted to say this was a blast today. And also it was a blast. Most people ever tuned in. So it means we're doing something right, which means bringing Nick on the show. So, which would be, hopefully we have you soon again, and want to just thank you for everything. Awesome. It was awesome. Actually, it was awesome. Thanks a lot, Nick. Yeah.
Thanks for having me.
Yeah,
thanks
everybody
again for coming to the call.
Awesome. Cool. Thanks a lot, guys. I think we overshooted a lot with the time, but it was very much positive that we did that, and I'm very happy we did that. And I think we also slowly answered all the questions that we have. So I think, we can, slowly kind of wrap it up. Say thank you everyone who joined in. And again, thank you to all the superstars today on the call. Nick, Jerne, and Tom, thanks a lot for joining. And it was an absolute blast. So really want to thank you for being part of the call. It was really awesome. I really enjoyed it. It was awesome.
Thanks, guys.
Cheers. Thank you, Anton.
Thank you very much. Have a good day, everyone.
Yeah.
Awesome. Thanks, Rory. Thanks a lot, guys. Thank you.